Here is a video I've been waiting to do all year, and we're finally getting to it. Today we will be covering the Dogs of the Dow strategy and looking at 3 Dogs of the Dow for 2023. This strategy has been utilized by dividend investors for years. Now, will it be successful in 2023 will be anyone's guess. However, given the state of the economy right now, where we're expecting a slowdown, I am looking for the Dogs of the Dow strategy to actually perform quite well in 2023. And today we will be looking at 3 of the top Dogs of the Dow stocks that I like going into 2023. With that being said, let's get started. Hey everyone, Mark Rusin here, back for yet another video looking to help investors like yourself learn more and be able to utilize dividend stocks to meet your long-term financial goals. However, before we begin, here's a quick word from today's sponsor. In today's fast-paced environment that we live in and skyrocketing education costs, the idea of finishing or just going to college can seem both unrealistic and far too expensive. After all, we are seeing students go to school and they are drowning in debt for years to come. However, this is where Southern New Hampshire University, or SNHU, comes in. SNHU is one of the largest accredited nonprofit universities with online courses in the nation. They are radically affordable and their online tuition rates are among some of the lowest in the nation. No longer does the lack of experience or degree need to hold you back in your career. You can gain that from SNHU at an affordable cost. Right now, if you go to snhu.edu/Mark, you can see what the current average annual salary is for a number of different programs that they have. So go check out SNHU today. Now let's turn our attention back to the Dogs of the Dow. And if you are unfamiliar with this strategy, what the Dogs of the Dow strategy is looking at the prior performance. So 2022, we are going to look at the top 10 highest yielding stocks from the Dow Industrial Index. So a major focus is on yield. And as you know, when you are a long-term investor, dividends play a huge role in total return. After all, when you look out many years and decades, dividends can account for more than 50% of the total return. And one of the misconceptions with the Dogs of the Dow strategy is that these are the worst performing stocks from the prior year. That's not necessarily the case. We are looking at the top 10 highest yielding stocks from the Dow. Look at Chevron. Chevron had a huge year in 2022, and they are on this list of top 10 Dogs of the Dow. However, I can see how this misconception can come to play because after all, when a stock price comes down, a dividend yield comes up. So with that being said, let's take a quick look at the top 10 Dogs of the Dow of 2022 heading into 2023. So with this list, we are going to look at the top 10 highest yielding dividend stocks within the Dow Jones. That begins with Verizon, who has a dividend yield of 6.2% as of this video. Next is Walgreens with a dividend yield of 5.2%, followed by Intel with a 4.9% dividend yield, Dow component with a 4.8% dividend yield, 3M has a 4.6% dividend yield, IBM has a 4.5% dividend yield, Chevron, which we just spoke about, has a 3.2% dividend yield, Amgen has a 3.1% dividend yield, Cisco has a 3.1% dividend yield, and rounding out the top 10 is JP Morgan Chase with a 2.8% dividend yield. So which of these Dogs of the Dow, this list of 10 that we just went through, which 3 do I like heading into 2023? Let's begin with Dog of the Dow, number 1 being Intel Corporation, stock ticker INTC. Intel Corporation currently has a market cap of $124 billion. Intel is a name on the list because not only do they pay a decent dividend, but largely because their stock has been hammered over the past year. Over the past year, shares of Intel are down 45%. Remember, as a stock price goes down, a yield goes up. Intel has largely been a company that I have ignored and found difficult to own. Management has been quite poor. Execution has been terrible as they have seen huge delays in their products for a number of years. The company continues to lose market share to the likes of AMD, Nvidia, and other chip makers. However, the company is investing a ton into righting the ship, and they are still a key chip used in many popular products. Intel has the ability to turn things around. Again, I have largely ignored shares of Intel, but at the start of the year, I took a look at them and they just looked way too cheap. And I wanted to look at them and play them with options. So what I did was I bought 100 shares of Intel at around $26, and I sold a short-dated covered call with a strike price of $29. Now, Intel is off to a great start to start this year in 2023, so those shares have since been called away. But again, I made a roughly 10% gain in a short period of time. Intel is currently led by CEO Pat Gelsinger, who is an Intel guy himself, and he is charged with turning this company, this once proud company, around. And like you will see with a few of the other dogs that we'll look at today, there is inherent risk with this company. Sure, they are investing in the company, but can they execute and deliver? The PE ratio currently sits in the single digits, which, as you can see from this chart, is near the low end of the range over the past 5 years. So although you have risk, you are getting a great price. The company currently pays an annual dividend of $1.46 per share, which equates to a dividend yield of 4.9%. Over the past 5 years, the company has a 5-year dividend growth rate of 6%. Dog of the Dow number 2 is 3M, stock ticker MMM. 3M currently has a market cap of $74 billion. Over the past year, shares have been hit hard, down nearly 30%. Part of that was due to the slowing economy, rising interest rates, and the overall drop in the market. But a lot of it had to do with the legal issues that 3M finds themselves in right now. For years, 3M has been a bellwether industrial giant, but there are some risks when it comes to 3M right now that I need to make you aware of. 3M had one of its subsidiaries, Aero Technologies, file for Chapter 11 bankruptcy, which is the unit that created these defective military earplugs that have led to a loss of hearing for thousands of military personnel. These military folks have brought suit against the company, and when they filed for bankruptcy, it was viewed as 3M trying to shift the liability off their books and into the bankruptcy case. At the end of 2022, a federal judge came out and said not so fast, saying that the company could not do that, and the lawsuit, which currently has over 200,000 cases, would be the liability of 3M. 3M has since appealed the decision of that judge, so things are in a waiting period right now. The range of liability estimates for this is quite wide, from around $10 billion to as high as $82 billion. Which, if on the higher side, could pose a serious threat to 3M. I believe things will be on the lower end when all's said and done as they continue to go through all the appeal process, but that is a risk every investor would take in investing in 3M. 3M currently pays a dividend of $5.96 per share. The yield is 4.6%. They have a 5-year dividend growth rate of 5%, but I expect that to be very low due to these pending liability issues. The company, though, is a dividend king as they have increased their dividend for 64 consecutive years. 3M has also paid a dividend for more than 100 consecutive years. Dog of the Dow number 3 is JP Morgan Chase, stock ticker JPM. JP Morgan currently has a market cap of $419 billion. The company is the largest bank in terms of total assets. The company has a great leadership team led by the great Jamie Dimon. JP Morgan recently announced earnings that beat analysts' expectations. In the company's earnings, they alluded to a mild recession, which, if that happens to be the case, it would be huge for banks. JP Morgan and Bank of America are the two banks that I like best. As we continue to see interest rates climb, which the Federal Reserve continues to increase those, net interest margin for these banks continues to climb as well, which can be viewed as the difference between the interest that they are earning from things like loans and the interest that they pay out for things like savings accounts. JP Morgan has strong cash flows that have surpassed $90 billion, and these strong cash flows help fund a growing dividend. The company currently pays a dividend yield of 2.8%, and over the past 5 years, they have the strongest dividend growth of these 3 stocks that we looked at today at roughly 13.5%, and they have increased their dividend for 8 consecutive years and counting. So there we have it, folks. 3 dogs of the Dow. This strategy has been utilized for a number of years. They look at the top 10. You can pick all 10 and just kind of dabble into all of them. But in this video, we looked at 3 that we like best. Although I mentioned that there are risks. Intel needs to turn things around, so there's a risk there. 3M has their liability issues with their legal cases that they're messing with. So the safest on this list is probably JP Morgan. They have a great leadership team, a growing dividend, and if we get a mild recession, financials are going to be proven to be a great investment. Down in the comments section below, let me know if you have ever used this dog of the Dow strategy. And if you enjoyed the video, make sure you smash that like button down below, subscribe to the channel so you are notified about any future videos that we have. And with that being said, we'll see you next time. Take care.